Hello, we are the group 4 and we are now going to report completing the audit. But first, before we go to problem number 1 and problem number 2, let me explain to you what is a subsequent events since it will be used on the next problems. An independent auditor's report ordinarily is issued in connection with historical financial statements that purport to present financial position at a stated date and results of operations and cash flows for a period ended on that date. Pero minsan, may mga events at transactions na nangyayari pagkatapos makagawa ng balance sheet at bago mailabas ang financial statements. Dahil dito, meron siyang material effect sa ating financial statements kaya kailangan nating i-adjust or i-disclose. Tinatawag yung mga events at transactions na ito as subsequent events. Note: when performing an integrated audit of financial statements and internal control over financial reporting, refer to paragraphs 0.93 to 0.97 of AS 2201, an audit of internal control over financial reporting that is integrated with an audit of financial statements, which provide direction with respect to subsequent events in an audit of internal control over financial reporting. There are two types of subsequent events require consideration by management and evaluation by the independent auditor. The first type consists of those events that provide additional evidence with respect to conditions that existed at the date of the balance sheet and affect the estimates inherent in the process of preparing financial statements. Lahat ng information na nakalap before ma-issue ang financial statements ay dapat na gamitin ng management sa kanyang pag-evaluate ng mga conditions kung saan nakabase ang kanilang mga estimates. At yung information na yon ang magsisilbing evidence para sa pag-adjust ng financial statements. Identifying events that require adjustment of the financial statements under the criteria stated calls for the exercise of judgment and knowledge of the facts and circumstances. For example, nagkaroon ka ng loss sa isang uncollectible trade account na nangyari kasi yung customer mo ay papunta na sa pagiging bankrupt. Pero sa balance sheet mo ay collectible pa siya. Kaya kailangan mong i-adjust yung financial statements mo bago mo siya ilabas. Pero kapag naman nagkaroon ka ng loss sa isang uncollectible trade account, pero ang dahilan ay nasunugan or any other major casualty, ay wala itong pagbabago sa ating balance sheet date at hindi natin kailangang i-adjust ang financial statements. Kapag naman may settlement of litigation para sa mga liability amount na nagkaroon ng difference, let's say because of personal injury or patent infringement, kailangan nito ng adjustment sa ating financial statement kung nangyari ito before pa magawa ang balance sheet. The second type consists of those events that provide evidence with respect to conditions that did not exist at the date of the balance sheet, being reported on but arose subsequent to that date. Hindi natin kailangan i-adjust ang mga event na ito, pero some of the events may be very significant na kailangan natin silang i-disclose para hindi maging misleading ang ating financial statements. It can be very significant na ang pinaka-best disclosure is to use pro forma method or parang magpro-provide tayo ng financial statement na as if nangyari siya at the date of the balance sheet. Usually, hindi naman lahat ng financial statements ay need ng pro forma method, pero ang pinaka-importante is to provide a pro forma balance sheet. Example of events of the second type that require disclosure to the financial statements but should not result in adjustment are sale of a bond or capital stock issue, purchase of a business, settlement of litigation when the event giving rise to the claim took place subsequent to the balance sheet date, loss of plant or inventories as a result of fire or flood, losses on receivables resulting from conditions such as a customer's major casualty arising subsequent to the balance sheet date. Subsequent events affecting the realization of assets such as receivables and inventories or the settlement of estimated liabilities ordinarily will require adjustment of the financial statements because such events typically represent the culmination of conditions that existed over a relatively long period of time. Subsequent events naman na katulad ng pagbabago ng quoted market price of securities ay hindi kailangang i-adjust ang financial statements dahil yung ganong klase ng pagbabago ay magkakaroon lamang ng effect kapag in-evaluate na mismo yung mga bagong conditions. When financial statements are reissued, for example, in reports filed with the Securities and Exchange Commission or other regulatory agencies, events that require disclosure in the reissued financial statements to keep them from being misleading may have occurred subsequent to the original issuance of the financial statements. So, kung may nangyaring subsequent event tapos in-adjust mo na siya, then i-reissue na ulit yung financial statements pero may nabago na naman. Hindi mo na siya kailangang adjust unless ma-meet nito yung criteria o correction of error for prior period adjustments set forth by the opinions of the Accounting Principles Board. Same din kapag any comparative form na financial statements. Occasionally, a subsequent event of the second type has such a material impact on the entity that the auditor may wish to include in his report an emphasis paragraph directing the reader's attention to the event and its effects. There is a period after the balance sheet date with which the auditor must be concerned in completing various phases of his audit. Ang period na yon ay yung tinatawag na subsequent period, mula sa paggawa ng balance sheet hanggang sa pag-report ng auditor. Yung tinatagal ng subsequent period ay nakadepende sa practical requirements ng isang audit. So, pwedeng sobrang ikling period lang or aabot ng ilang buwan. Tsaka hindi naman lahat ng audit ay sabay-sabay na ginagawa. At yung iba pang audit ay ginagawa habang nasa subsequent period. Kaya kung iisipin, yung ibang inaudit mo, patapos na or kumpleto na, pero yung iba, pwedeng nangyayari pa lang or mangyayari pa lang. Kung ikaw si auditor, kapag patapos yung mga kailangan mong i-audit, magfo-focus ka na sa mga part ng audit mo na unresolved audit and reporting matters, pero hindi ka naman expected na gawin yon, lalo na kung may ginawa ka ng auditing procedures at nasatisfy ka na. Certain specific procedures are applied to transactions occurring after the balance sheet date, such as the examination of data to assure that proper cut-offs have been made and the examination of data which provide information to aid the auditor in his evaluation of the assets and liabilities as of the balance sheet date. In addition, the independent auditor should perform other auditing procedures with respect to the period after the balance sheet date for the purpose of ascertaining the occurrence of subsequent events that may require adjustment or disclosure essential to a fair presentation of the financial statements in conformity with generally accepted accounting principles. Ginagawa to kapag malapit na yung auditor's report. Ano nga ba yung mga dapat gawin natin as an auditor? Read the latest available interim financial statements, compare them with the financial statements being reported upon, and make any other comparisons considered appropriate in the circumstances. At para maging mas meaningful as possible, dapat magtanong si auditor sa mga officers at iba pang executives na may responsibilidad sa financial at accounting matters kung sa'yo ba yung mga ginamit na basis ng financial statements na ginawa nila at yung ina-audit niya. Number 2, inquire of and discuss with officers and other executives having responsibility for financial and accounting matters, limited where appropriate to major locations, as to whether any substantial contingent liabilities or commitments existed at the date of the balance sheet being reported on or at the date of inquiry, whether there was any significant change in the capital stock, long-term debt, or working capital to the date of inquiry, the current status of items in the financial statements being reported on that were accounted for on the basis of tentative, preliminary, or inconclusive data, whether any unusual adjustments had been made during the period from the balance sheet date to the date of inquiry, whether there have been any changes in the company's related parties, whether there have been any significant new related party transactions, whether the company has entered into any significant unusual transactions, and read the available minutes of meetings of stockholders, directors, and appropriate committees. As to meetings for which minutes are not available, inquire about matters dealt with at such meetings. Inquire of clients' legal counsel concerning litigation, claims, and assessments. Obtain a letter of representations dated as the date of the auditor's report from appropriate officials, generally the Chief Executive Officer, Chief Financial Officer, or others with equivalent positions in the entity, as to whether any events occurred subsequent to the date of the financial statements being reported on by the independent auditor that in the officer's opinion would require adjustment or disclosure in these statements. Pwede rin mag-request si auditor ng representation from these people, lalo na kung significant yung dinidisclose. Lastly, make such additional inquiries or perform such procedures as he considers necessary and appropriate to dispose of questions that arise in carrying out the foregoing procedures, inquiries, and discussions. Ngayon, pumunta na tayo sa problem. Let's read it first. So, Crankwell Incorporation is preparing its annual financial statements and annual report to stockholders. Management wants to be sure that all of the necessary and proper disclosures have been incorporated into the financial statements and the annual report. Two classes of items that have an important bearing on the financial statements are subsequent event and contingent liabilities. The financial statements could be materially inaccurate or misleading if proper disclosure of these items is not made. So, kanina, na-discuss na natin kung ano yung meaning ng subsequent event, which is the requirement for A. Sabi dito, define what is meant by subsequent event, nagawa na natin, and identify the two types, nagawa na rin natin, and what are the procedures that should be performed by the auditor, nagawa na rin natin. So, let's move on to letter B with respect to contingent liabilities, and letter C, which wants us to explain how a subsequent event may relate to contingent liability. So first, let's identify the essential element of a contingent liability and explain how a contingent liability should be disclosed in the financial statements. So ano ba ang element ng isang contingent liability? Isa lang naman, it should be make sure that there is no liability exists on the date of financial statement, but the occurrence or chances of the liability should be there. So, ang contingent liability, basically, hindi pa natin alam kung mangyayari siya, pero may possibility in the future. It's either because of a condition or an agreement. So, paano nga ba natin dinidisclose ang isang contingent liability? Contingent liability should be disclosed in the balance sheet under the head of current liabilities, but should not be added in the value of liabilities. So, ano ba yung pagkakapareho ng subsequent event at contingent liabilities? Both subsequent events and contingent liabilities depend on the uncertain future events. Example of subsequent event is adjusting events, and example of contingent liability is outstanding lawsuit. So, parehas sila na hindi pa natin sure kung mangyayari in the future, pero may possibility. So, let's move on to our next problem, which is subsequent event cases. So, dito, titingnan na natin mabuti ang mga pangyayari kapag may subsequent event at kung paano natin siya i-adjust sa balance sheet or i-disclose. So, subsequent event cases. In connection with your examination of the financial statements of Ollars Manufacturing Corporation for the year ended December 31, your post-balances sheet substantive procedures disclose the following items. Basahin natin yung mga nangyari sa Ollars Company. On January 3, the state government approved a plan for the construction of an express highway. The plan will result in the appropriation of a portion of the land area owned by Ollars. Construction will begin late next year. No estimate of the condemnation award is available. On January 4, Young Ollars, president of Ollars Manufacturing Corporation, loaned the company $25,000. He obtained these funds on July 15 by borrowing against a personal life insurance policy. The loan from Ollars to Ollars Manufacturing Corporation was recorded in the account loan payable to officers. Ollars' source of the fund was not disclosed in the company records. The corporation pays the premiums on the life insurance policy, and the president's wife is the owner and the beneficiary of the policy. On January 7, the mineral content of a shipment of ore in transit in December 31 was determined to be 72%. The shipment was recorded at year-end at an estimated content of 50% by a debit to raw materials inventory and a credit to accounts payable in the amount of $20,600. The final liability to the vendor is based on the actual mineral content of the shipment. On January 15, a series of personal disagreements have arisen between Ollars and Saint Tweedy, his brother-in-law, the treasurer. Tweedy resigned, effective immediately, under an agreement whereby the corporation would purchase his 10% stock ownership at book value as of December 31. Payment is to be made in two equal amounts in cash on April 1 and October 1. In December, the treasurer had obtained a divorce from Ollar's sister. On January 31, as a result of reduced sales, production was curtailed in mid-January and some workers were laid off. On February 5, all remaining workers went on strike. To date, the strike is unsettled. So, required is assume that the preceding items come to your attention prior to completion of your audit work on February 15 for each item. Give the substantive procedures, if any, that would have brought the item to your attention. Indicate other sources of information that could have revealed the item. Discuss the disclosure that you would recommend for the item, listing all details that should be disclosed. Indicate those terms or details, if any, that should not be disclosed. Give your reasons for recommending or not recommending disclosure of the items or details. So again, substantive procedures are the steps taken by the auditor after finalizing the accounts and before issue of auditor report. It is performed on subsequent events which occur between date of financial statements and date of audit report. It is assumed that following events are the subsequent events, hence the substantive procedure is on January 3, it should be reported in the disclosure as a plan for construction of highway is going to take place by government, and it is mandatory for the organization to provide the portion of land. On January 4, as the given situation occurs as a subsequent event, so yung binigay ng president ng company, which was his wife was actually the beneficiary. So, i-report niya yun as a related party transaction at hindi mortgaging personal insurance policy. And in January 7, as there is a difference of 22% in the quantum of actual minerals and minerals recorded, so the difference should be adjusted in the financial statements. And on January 15, since Tweedy resigned from his position and company has liability to pay the amount, then it should account for the same. Pero yung payment, hindi isahan, but in two different days, which is 1st of April and 1st of October. And on January 31, in the given case, it is said that production had been curtailed in the mid-January and some workers were laid off. Tapos nung February 5, lahat ng remaining workers ay nag-went on strike. So kapag nangyari yon, for sure walang production, at kapag walang production, magre-resulta yun sa pagbaba ng ating net income. Next is the auditor is required to disclose the same in the financial statements kapag na-identify ng material subsequent events, at syempre required din si auditor na i-disclose lahat ito sa financial statements. At kailangang nag-reflect ito sa current information at kailangan ding according sa generally accepted accounting principles.
So let's proceed to the attorney letters. This is the case. Faye Jaworski is auditing the financial statements of Fulbright Company. As she is nearing the audit completion date, Jaworski realizes that she needs to evaluate whether all material contingencies are properly accounted for and disclosed in Fulbright's financial statements. Because of its size, Fulbright has retained external counsel, Vinson LLP, to handle its various legal matters. So we can see here some of the questions which will be answered in the succeeding slides. So dito makikita nyo yung information which will be helpful in the legal process of the company. So, nakikita nyo iba't ibang taon, 2009 up to 2013. Tas yung effect sa net income, net assets, liabilities, equity is magkakaugnay sila since makikita sila sa financial statements and related sila sa events na meron sa company during the litigation process. So, list some common procedures that Jaworski will perform with respect to Fulbright's litigation, claims, and assessment. So first, ask management regarding litigation, claims, and assessments. Since sila yung pinaka-leader ng organization, sila ang dapat may pinaka-may say sa kung ano ang events inside of it. Second is examine documents concerning litigation, claims, and assessments from lawyers. Since these documents serve as proof sa legal process, they should be examined so that the legal process must be executed. Third is obtain assurance from management that it has disclosed all material unasserted claims the lawyer has advised them are likely to be litigated. So, need na maka-assure from management na alam ng management kung ano yung ina-advise ng lawyer nila about sa litigation or assessments para magkaroon ng direction kung ang kanilang decision making inside the company. Fourth is obtain information concerning guarantees from bank confirmations and review legal expense account and cash disbursements records and invoices related to legal service. So, these documents are necessary and vital in the legal process since they serve as proof into what the company is into and what is happening inside of it. So, it is necessary that it must be examined and must be observed. What are the responsibilities of Jaworski, Fulbright, and Vinson with respect to litigation, claims, and assessment? For Fulbright, which is the client, it's responsible to respond to auditors' inquiries, provide auditors a list, description, and evaluation, and send a letter to the attorney that includes such information. For Jaworski, which is the CPA, its responsibility is to evaluate whether all material contingencies are properly accounted for and disclosed in Fulbright's financial statements. So since siya yung CPA ng company, siya ang may responsibility to check if the financial statements are properly presented. Vinson, the lawyer naman, is responsible to auditors regarding the case of Fulbright. Attorney letters are used to provide corroboration of litigation, claims, and assessments against the client. Briefly describe the process through which attorney letters are prepared, sent, and used in the audit examination. So, first is auditors initiate the request for the client to send the attorney letter. So, si auditor nag-i-initiate para makapag-send si client ng attorney letter. And then, the attorney letter, along with a list of litigation, claims, and assessments, is sent to each attorney who has devoted attention to legal matters. And the last is, the attorneys will respond directly to auditors on the information contained in the attorney letter. What information is normally included in an attorney letter? An attorney's letter is a formal business letter sent by a certified public accountant to a client's attorney. The attorney's letter verifies the information sent by the management of a company pertaining to pending litigation of the company. Kumbaga, ito yung written authorization to represent or act on another's behalf in private affairs, business, or some other legal matter. Yung tawag dun sa person authorizing the other to act is the principal, grantor, or donor. Yung the one who authorized to act naman is the agent, or in some common law jurisdictions, the attorney in fact. The purpose of the attorney's letter is to inform and certify to the auditor of any legal action against the client that could result in an adverse financial impact on the company's financial statements.
Hart, an assistant accountant with the firm of Better and Best CPAs, is auditing the financial statements of Tech Consolidated Industries Incorporated. The firm's audit plan calls for the preparation of written representations. A. In an audit of financial statements, in what circumstances are auditors required to obtain written representations? Next, what are the major categories of items covered by the written representations? Next is to whom the representations should be addressed and as of what date should they be dated. Next is who should sign the representations and what would be the effect of a refusal to sign them. And lastly, in what respect may auditors' other responsibilities be relieved by obtaining written representation. In an audit financial statements, the circumstances are that auditors required to obtain in written representations is that the auditor should request written confirmations from management that they have informed them of all known actual or potential violations of laws and regulations, the impact of which should be taken into account when drafting financial statements. According to AU 580, auditors must get written confirmations and support for the proof they gathered during the audit. The CEO and or CFO typically sign these letters. The letter should provide the date that the audit is finished. Any additional events after the reported date of the financial statements must have these written representations. A few examples of what might happen between the two dates are as follows. There was a considerable danger that the asset's value would be impaired, and the company announced its intentions to cease operations. Long-term debt modifications, short-term debt maturities, or related information about changes to internal controls. Next is the major categories of items covered by written representations are making sure that management understands that the financial statements and disclosures are ultimately their responsibility. The written representations specifically mention this obligation. A written confirmation submitted to the auditor by management to support other audit evidence or to affirm particular items. The written representations are divided into three primary portions, each of which covers a different topic. The financial statements are discussed. You can anticipate learning about management's accountability for the financial statements as well as the various internal controls affecting the statements in this part. Next is an explanation of the information that was leaked and what was given to the auditors. And lastly, an explanation of their internal controls, effectiveness, and any changes within these techniques. Next is knowing that to whom the representations should be addressed and as of what date should they be dated. The representations should be addressed to the CPA firm conducting the audit. It should be dated for whenever the audit is completed, which is the report date. Next is who should sign the representations and what would be the effect of a refusal to sign them. The CEO, CFO, and or other Appropriate officers should sign the representations. Refusal to sign would lead to a scope limitation, and this is a restriction on the audit process caused by the client, resulting in the inability to carry out all necessary audit procedures. This refusal to sign should also lead the auditors to question the integrity of management and reconsider reliance on other assertions and/or evidence provided. Lastly, in what respects may auditors' other responsibilities be relieved by obtaining written representations? The only available evidences is the written representations. When this is the case, this relieves the auditors of other responsibilities. However, this is not an excuse to bypass other substantive procedures as well.
Before answering the case study, we start off with what are subsequently discovered facts. To put simply, these are information that the auditor discovers after the date of the auditor's report. The auditor's response to circumstances like these depends on when the auditor found out about it. If the subsequently discovered fact was found after the date of the auditor's report but before the audit report release date, this may still be revised prior to the issuance. It may also depend on the type of the information the auditor had found out. If the fact has an effect that requires the revision of the financial statements, of footnotes, disclosures, auditors should perform additional procedures and evaluate how to disclose these events appropriately. However, there are events na no need to be disclosed, but for those that are required, they must follow the following requirements. One other option an auditor could do is to do a dual date report. For example, the date of issuance of the financial statements is at December 31, 2022, and the subsequently discovered fact is found on the 2nd of February 2023 about a misstatement in recording of inventories, which can be found on the notes to financial statements in number 19. So what the auditor could write at the footnotes of the financial statements is simply like this. December 31, 2022, except for a note 19 as to which the date is at February 2, 2023. The first date, of course, is the date of issuance, while the second date represents when the fact was discovered or when the misstatement was found. Facts that will require disclosure of events if the facts are reliable and existent at report date, facts affect the financial statements and auditors' reports, and persons are continuing to rely on financial statements and auditors' reports. If the client refuses disclosure, auditor should inform the board that he or she will notify regulatory agencies and others relying on the reports. Going back to the question, on June 1, Sydney Faultless of AJ Faultless and Company CPAs noticed some disturbing information about the firm's client, Hopkirk Company. A story in the local paper mentioned the indictment of Tony Baker, whom Faultless knew as the assistant controller of Hopkirk. The charge was mail fraud. Faultless made the discreet inquiries with the controller at Hopkirk's headquarters and learned that Baker had been speculating in foreign currency futures. In fact, part of Baker's work at Hopkirk involved managing the company's foreign currency. Unfortunately, Baker had violated company policy, lost a small amount of money, and then decided to speculate some more. Lost some more and eventually lost $7 million of the company's funds. The mail fraud was involved in Baker's attempt to cover his activity until he recovered the original losses. Most of the events were processed on March 1, when Faultless had signed and dated the unmodified opinion on Hopkirk's financial statements for the year ended on the previous December 31. Faultless determined that the information probably would affect the decisions of external users and advised Hopkirk's chief executive to make the disclosure. She flatly refused to make any disclosure, arguing that the information was immaterial. On June 17th, Faultless provided the subsequent information in the question to a newspaper reporter and was printed in the Wall Street Journal with a statement that the financial statements and accompanying auditor's report to the company's financial statements could not be relied on. The questions to be answered here is to evaluate the actions of Faultless and Company CPAs with respect to the information discovered. What other action could Faultless and Company have taken? What are the possible legal effects of the firm's actions, if any? Hopkirk's action of trying to cover up said amount due to the mail fraud of 7 million violates faithful representation, making their financial statements unreliable. Faultless Company may have taken other actions in the event that the management to take the appropriate action, and the auditor must notify key personnel in governance that the auditor's report may no longer be relied in the future. We can also conclude that the affected parties will include the management of HC and, if necessary, relevant members of the governance team in this situation. When third parties receive the financial statements from Faultless and Company, they should be made aware and they should not rely on the information included in them. If the previous opinion does not match the opinion to be performed on the updated financial statements, it may be necessary to include an SAS emphasis of matter paragraphs and other matter paragraphs in the independent auditor's report.
And that concludes our presentation. Thank you for listening.